I'm Rick Kaler. Thanks for joining me. It's been years since I took dance lessons, but as I remember it, an evening of dancing has an overall rhythm that's separate from each individual song. A good band will vary the tempo of the dance by playing a lot of variety of music. Too many slow songs and dancers get bored doing the 1-foot foxtrot or the 2-foot two-step. Guess I didn't do too well in dance class. But too many polkas or really fast jitterbugs, and well, half the crowd might end up a bit too literally on the floor. A dance band might play mostly country western music. They could have a big band sound or classic rock or focus on really oldies. But no matter what type of music it plays, in order to be successful, it's got to have a lot of different songs in its repertoire. And no band is going to be invited back if it played nothing but novelty dances like the Hokey Pokey or the chicken dance. These might be fun for a few minutes or for toddlers, but nobody, except for the 3-year-old, and probably the 3-year-old is going to be on a sugar high, really wants to do them over and over and over. Well, unfortunately, some investors use what we might call the hokey pokey method of investing. They follow the latest get-rich-quick guru, or the ups and downs in the market, just like dancers following the directions of the song. They put their right foot in. They take their right foot out. They put their left foot in. The shaking all about, I think, is the money falling out of their pockets when the market goes down and they miss the timing a little bit. Those least likely to enjoy this type of dance are the ones that put their whole self in by investing everything they have in one company's stock or one asset class like U.S. stocks. When the value of that investment goes down, as it's bound to do sooner or later, they get scared, pull their whole self out. Usually, this is at precisely the wrong time, when the market is about to start up again. The investment class where most investors go all in is U.S. stocks. The majority of portfolios that I see are heavily overweighted in U.S. stocks. And yet this asset class is just one out of 10 different asset classes. If you have everything you have, or most all of it, in the U.S. stock asset class, you are certainly putting all of your eggs in one basket. Now, if a young person went all in just in stocks and never took their whole self out, they would probably be okay. In fact, they'd probably do very well. But unfortunately, most investors can't leave well enough alone. The downturns are usually too much to bear emotionally, so they try to time the market, get rid of all of the anxiety by attempting to sell when stocks are high and buy when they are low. That almost never works. The brain is not wired to sell high and buy low. By trying to time the U.S. market by going all in and then all out, you compound your anxiety and depress your investment returns, as well as depressing your emotions. It's even worse if inexperienced investors fall prey to scam artists and put their whole self in by speculating on dubious schemes that are more hocus pocus than hokey pokey. Some of those scams are multi-level marketing programs, dubious limited partnerships, investing in the scam du jour, and even going into what could be called good investments like business or real estate. Whenever you go all in to any investment, there's a high probability that you have set yourself up for a nasty fall. Diversified investing is not diversified amongst many mutual funds. It's not diversified amongst many advisors. It's not diversified amongst many different brokerage companies. It's diversified amongst different asset classes, like commodities, U.S. bonds, international bonds, U.S. stocks, international stocks, absolute return, managed futures, treasury inflation protected securities, junk bonds, high quality bonds, both international and U.S. These are different asset classes, and you probably should have a little bit of every one of them in your portfolio. So diversified investing is like pacing your dancing. When you have a mix of tempos and a variety of steps, you can enjoy the music for the whole evening. Once in a while, a galloping polka might make you a little dizzy, or you might get out of breath doing the twist, but the next slow two-step will give you the chance to recover. With a variety of music, you'll still be having fun at the end of the night. Thanks for joining me.